Well, hi everyone. My name is Alastair. I'm a venture capital editor at Venture Capital Journal and PE Hub Canada. So it's a pleasure to be here. Thank you very much. I think it's best maybe if each one of the panelists just quickly introduce themselves. Maybe say our names and your firms are up on the board. Maybe just say, your focus area in Canada. John, why don't you start us off?
Hi, I'm John Ruffalo. I run Omer's Ventures based in Toronto, and we are a venture investor, and a bunch of the logos that have been on the screens are a lot of our portfolio companies.
Will you be able to talk about Shopify?
Except that one there.
Except that one, okay. How much wine have you had? Not enough. David.
Hi, David Blumberg. I'm the founder and managing partner at Blumberg Capital. We're based in San Francisco headquarters, and we have an office in Tel Aviv. But we've also been very lucky to have invested in Canada and Germany. So the four countries are North America, Germany, and Israel. Managing almost about 500 million now across 4 different funds. And our specialty is very early stage, so seed and A. Nothing's too early. So pre-revenue is fine, even pre-product.
How many companies did you say you invested in Canada? Did you just say 4?
I've done 4 so far in my lifetime,
okay.
And looking for the next one very soon. It's coming. Watch the papers.
Dan.
Hi, my name is Dan Park. I'm with a firm called Azure Capital Partners. We're based here in San Francisco. I run our Canadian office of one. I spent a lot of time in all the geographies. We actually did our first investment 15 years ago in Canada, and then restarted that effort about 3 years ago. Since then, or about 2.5 years ago. Since then, we've made 3 investments into Canada. We've co-invested with a few of the people on the panel here. Have been fairly active. We like Canada for a bunch of reasons. We invest primarily in Series A and Series B, but do carve out a small portion of our fund to invest in what we call post-seed opportunities. Invest across all sectors in IT, and like to get in and help companies really take it to the next level.
How old is the Calgary office? About 2 years?
Yeah, officially 2 years.
Officially 2 years. Harry.
My name is Harry Singh. I work at Intel Capital. Now, as you know, Intel Capital probably most years the biggest tech VC in the world. And we have about 4 companies in our portfolio, 3.7 billion invested capital. Now, before I give you, everything about Intel Capital, we have been very active in Canada for a number of years. We have done almost 30 plus deals in Canada. About 10 of them exited, and such as BlackBerry and Smart Technology, Calgary, and the RIM guys. And we recently, probably last year or so, we done 4 or 5 investment, Recon, Talmic Labs, Precision Hawk, so we are strategic investors, but we also look for a good mix of financial returns. We are active investors. We take board seat lead investments, and do follow-ons when it makes sense for us. And I'm happy to be here and answer any questions you have. Before I move on, I also want to acknowledge Lee Sessions here, who is the managing director at Intel Capital. We've done, I don't know how many deals over the years, but Lee is pretty much responsible for communicating that goodness to to the outside world. And I took pride in championing Canada within Intel Capital until I discovered Lee Session. Although he's American at heart, he practically lives in Hudson Bay. He spends a lot of time in Canada and loves even Canadian bears more than American bears.
Okay, Christina.
Hi, everybody. Christina Bergman. I'm with Ignition. Woo! I've been sitting here drinking while the bureaucrats have been talking. Just kidding. It's great. I'm with Ignition. We do Series A and Series B investing. We're primarily an enterprise-focused fund. In the last 3 years, we've had about $7 billion in exits, $700 million returned to our investors. Right now, they really, really like us, which is great. We're primarily focused on infrastructure investing, so you've probably heard of Splunk or Cloudera or some of those others. Cloudera is another Intel investment. we do like a lot of data. We like a lot of security, plumbing, infrastructure. It's our specialty. It's kind of what we're good at. It's what we do. And we do Series A and Series B.
Well, great. Before we begin, so I'm sure you all know each other, but we wanted to get maybe a sense of who is in the room. So if you're a direct investor in companies in Canada, can you raise your hand in the audience? You don't have to be shy. Are there any LPs in the audience? No. Any entrepreneurs? A couple. Okay. I was thinking beforehand that several years ago I met the folks from Ripple, based out of Toronto. And I remember I met Dan, this was before their Series A, and he was telling me how great Canada was. And you know, being a reporter, I've heard all this before, and I thought, yeah, right, Dan. But I mean, if you know the story of Ripple, you know, I wrote about their Series A couple years later, and stayed in contact with Dan, and still to this day. And you know, Salesforce bought them a few years ago, and he's still there. And you know, we saw the exits listed on the previous panel, Radian 6. We talked about the next narwhals. Am I saying that right? Narwhals. Things are hot in Canada, and I don't think this audience needs to be sold that, but I mean, who on the panel wants to tell us why? Why is that going on? The first panel kind of set the framework of, you know, this is what's happening. Why? What are the VCs saying? Why are things so hot in Canada? Why are we talking about narwhals, and who are the emerging billion-dollar companies? What is happening in Canada that's making things so attractive? Go for it, Harry.
You know, so I think, you know, quite a few things are happening. You know, the talent is always there, great schools are always there, but you know, so you see the growing unicorn club, right? So that's showing a sense of confidence just because they see at the unicorn, you know, the Hootsuite and the Shopify and the desire to learn and the beyond that. So I think there's a sense of confidence. Yes, we can sustain companies for a long time. We don't have to exit when we hit the $10 billion mark, for example. You know, that one thing. And now the talent in terms of universities, of course, you know, the British Columbia, University of British Columbia, the Waterloos and the University of Toronto's and the McGills of the world, and them getting exposed to Silicon Valley, whether it's internship and hiring. And there was some statistics recently that Waterloo is #1 hire some of the Google or Facebook, and you know, you see that. And then, you know, somebody asked me, you know, what is so drastic, all drastic, in, you know, the incentives available in Canada. I think, you know, besides just the the tax benefits or the cost benefits that Dina mentioned before, you have, you know, if you look at all these startups, you look at all these, you know, credits, you know, besides just a simple tax things, SHRED credits, the IRAP and the WIN, the NSERC, the MyTax, you know, if you add that all up, I mean, you're pretty much looking at, you know, it, depending on the stage of the company, early stage company, you are saving, maybe paying about 20% of the salary. Compared to what you would be paying here in U.S. I mean, you know, again, it goes up as your technology is more mature and you know, start making more revenue. So you see that. Now, other thing is the VCs, all these VCs, you know, who are operating more like you know, the Silicon Valley VCs, same KPIs, the way they look at the companies, the way they look at the you know, the entrepreneurs, the way they look at, you know, everything from the financials and the strength of the entrepreneurs, and you know, and not just the revenue part of the company, but you know, how other different metrics had to be looked at. You know, before we just start looking at, you know, how many patents the person has, and you know, what kind of degrees the person has, or so, you know, going beyond, you know, and looking at some of the KPIs and metrics which are more probably common in Silicon Valley, but this new generation of VCs which I see, and you know, and we'll work with a lot of VCs there, and it's kind of a thing. Boy, these guys work the same way. They're legal. The term sheets are pretty much the same. All the way they.
Is that true? The term sheets are comparable in Canada?
In some
Are you all going to agree with each other?
I don't necessarily agree. I think
Okay.
today I looked at a term sheet that had a 2x revenue cap on trailing 2x cap on trailing revenue, which was hard to define. So I think there's some of that, but I think what's really floating all boats is just riding tides. I think we view Canada as a 51st state. We invest 40% of our capital outside of the Bay Area, which I think is atypical of a lot of Silicon Valley funds. But what's happening is I think deal flow is competitive here. There's 282 new funds that were created last year, 87 new first-time funds, and it's getting competitive. So you go outside of the Bay Area, and naturally you go to Canada, and on the margin, things like talent and things like government credits are great and helpful, but I think it's really a phenomenon of just rising tides or floating all boats.
Yeah,
I did tell Dan to keep in check.
So there's
Okay,
two
Christina,
things.
then David.
Yeah,
Go
there's
ahead.
two things from our perspective. One is valuations in the valley are getting ridiculous. They're not going to be able to maintain that kind of value through successive rounds, and so
I think
we're
we all
starting.
agree on that.
Yeah, I think we're all in violent agreement, and so. We're starting to go further afield looking for great deals, and those further afield means going to other talent centers. And for us, that means Vancouver and Toronto specifically. There's enough tech talent in those hubs to support really, really big companies. So that's one thing. The other reason is we're starting to see spin-outs of really successful companies. People have done it once before, and now they're doing it again and repeating the model. I'm actually from Victoria, and I worked at Crystal Decisions. We got bought by Business Objects. It's now part of SAP. And the number of former coworkers I know who've spun out and started their own thing is phenomenal. Pretty much most of them. And if you walk up and down Yaletown in Vancouver, you'll see a whole bunch of old Crystal alumni that either spun out when Business Objects bought them or spun out when SAP bought Business Objects. And the same thing's true, and you're going to see it again and again with Electronic Arts and Hootsuite and everybody else in that ecosystem.
I think we're already seeing that a little
Yeah.
bit.
Oh, we're seeing a ton of it. Kevin over there invested in Alacadia, and that was a Crystal alum. And so you're seeing a lot more of it. And when you look at companies like RIM, they've spun out a whole bunch of great talent for software plus hardware. And so for Toronto, we're seeing a lot of that combo of hardware plus software expertise and understanding. And so we felt pretty confident investing in NIMI in Toronto because of the talent base that exists there.
David,
Yes,
what are you seeing?
One
Yes.
thing I failed to mention in my CV is that I actually lived in Canada. I was a landed resident. What is it called? Landed immigrant. I moved to Montreal. Et j'ai attrapé un petit peu l'accent canadien, quoi.
Oh, very good.
So I worked for a family office. It was the Bronfman family office in Montreal, and so I have actually had experience working on both sides of the border as an investor. And I will say it is now. This is 15, 20 years later, much easier to invest here. So I want to be honest. It's easier here. It's easier here than anywhere in the world. Let's be clear about that, for all the obvious reasons that you're gathered here. On the other hand, let's go time shifting. It was a lot harder anywhere 15 or 20 years ago. A lot of what's happened, and particularly when we look at Canada, the reduction of capital expenditures, the rise of SaaS model, the ability to go B2C through mobile phones, et cetera, is dramatically made it easier to do business anywhere. And I loved the Ontario folks who were talking about go global from birth. That's the new mentality. I really think going global, and with all due respect, I think people should worry less about sovereignty and where the domicile are. Let entrepreneurs breathe. Let them be free. Let them do what the market requires of them, and things will all work out. They will, as the consul very accurately said, they will especially do well if you reward education. Very, very important point. And taxes should be stable and low. That's a good thing. And reduction and business environment friendly. I want to compliment you on having a balanced budget. And the late Minister Flaherty was awesome. I mean, I wish we had somebody like that in our country. So there's a lot of things that have made it easier to do business cross-border. And what a blessed border we have, U.S. and Canada. What a great pair of countries. I mean, we really are lucky to have you, and I think you're lucky to have us as neighbors. So most of the time.
Mutually beneficial. Okay.
And so I just want to say it's easier now, and a few things that we particularly like about Canada is, again, the quality of the people. They're honest, they're sincere, they're clear, humble beyond where you should be. You shouldn't be so humble as, well, now I'm going to make a joke out of it. Golda Meir used to say, don't be so humble, you're not so great. But you are great.
You guys are so nice to each other. It must be a Canadian thing.
I'll stop there.
You've mentioned a couple of you have mentioned what you're seeing in terms of deals. Is it becoming more competitive? Do you have to? I've heard horror stories about investing in Silicon Valley, but what is it like now in a maturing Canadian market? Is it more US VCs competing for deals? Are we seeing valuations
Much less
drive up?
competitive.
Less and less competitive. Why is it?
No, not much.
I'm sorry.
Much less competitive
Much
than
less
in the Valley.
competitive than the Valley.
It's much easier
Normal
to get things done.
as they more. Go ahead, John.
I would say it depends on the sector.
Yes.
If you look at the last 10 or 15 years in the capital going into Canada, it's really been since 2011 where the tides have shifted. Canada's had a 10-year history before that, right after the dot-com bust, of being a dreadful environment.
Mm-hmm.
What's happened in the last 3 years is there has been, relative from a Canadian perspective, an explosion of sources of, particularly at the seed/Series A, but more so on the seed, angels, super angels, micro VCs, incubators, accelerators, been a lot of that, at least relatively speaking. When you start going down the food chain and starting to look at the Series B and later, there still is very, very little competition, at least from a Canadian domestic perspective. We're the only VC in the country that can write a check that's $20 million or more, hence why we have
Applause. Yes.
but that is the reason why the investments we have are Shopify, Hootsuite, Build Direct, Vision Critical, Wattpad, Desire to Learn, all of the largest ones on there. So from a domestic perspective, we like no competition, but it's not the right answer.
Yeah, I don't think this question was for you because you're dominating the market.
However,
Right.
the great thing in the
Yes.
last 3 years has seen the amount of U.S. in particular capital coming in. My ideal situation is when we're doing a Series B or later, we like to do half, not because we're constricted on the capital, but I want another set of brains and network around the table. And we've invested with everybody on this table. And that's what we love. And the one thing that I constantly hear from US VCs is up until 2011, there was nobody that could write a big check, particularly in later stage, that could actually match us. And the problem is, it is nice to have boots on the ground. So while we need the US ones because we actually think it'll add value to our portfolio, I think the reverse might be, we like the fact that you're there so you can hear what the heck is going on and you can actually help the company on the ground. Otherwise, you're flying back and forth all the time. So that combination of the two has been absolutely critical, and it's all happened in the last 3 years, really. And the one stat that I like to give, because people are asking me this question a lot, in Canada, so we really started investing in 2012. So from 2012 to the end of 2014, so in that 3-year period of time, we've invested in 22 Canadian companies. We put in ourselves $250 million. Our U.S. co-investors put in another $750 million. That was $1 billion coming in to only 22 companies in Canada. You would not say that before. That has really created this drafting of the ecosystem, and exits are starting to happen, and those folks are reinvesting back in. That's the excitement that you're starting to hear. Hopefully it's sustainable through a few cycles. That will be the key. We haven't seen it yet, but the Shopify one, the reason why it's being written about all the time, I mean, for God's sakes, it's only one bloody IPO. But when was the last great IPO in Canada was BlackBerry back in 1997, just to give you some perspective. And everybody is trying to draft behind Shopify. And God forbid if that goes badly, because there is everything else just starting to go up behind that.
Yes, a question. Say that again, please. Yes.
So Hootsuite? Hootsuite?
Who else is there?
Oh, what? In Canada?
Yes.
I think that's
We have where's John? Right?
oh, you're asking Omer
What-
specific?
What other companies?
What other
Commerce
company?
being a big pension fund.
Yes.
You know, they are pretty rich and they are kind of
Yeah. So are you asking what other companies?
yeah.
So Hootsuite, Desire to Learn, Build Direct, Vision Critical, Wattpad,
Shopify.
Renovis, yeah, Shopify.
He only invests in the best.
Apparently.
Password Box, thank you very much, Harry, for the acquisition.
Yes.
You know, I didn't do that one there, but I like the company. But you know, to be honest, that's a lot of cherry picking going on there too, right? Just because of the lack of competition. To David's point.
So,
Yes, Harry.
so so I would, I don't like making, just falling into general trends. For example, comparing Canada to Silicon Valley. Silicon Valley is a region, Canada is a country. Comparing, the companies, the deals are less competitive. Not true. I think there are some deals people like to get into, they can't get into. The good companies are always competitively priced. So I think you got to get into the specific deals. And once you get into specific deals, if we want to chase that good company, just like, Omer's and, has been chasing, I think you're going to see similar phenomena what you see here in Silicon Valley. I don't think it's much different. Don't compare this big piece of land there with this tiny piece here. Because it's much more concentrated. Of course, it's an ecosystem much more healthier. It's vibrant. It's going crazy. And I'm proud to be here. I'm happy to be here. But I think you got to go and look at every specific deal. And all those deals are not cheap. There's no fire sale going on in Canada. There's no. People are saying, if you want to get in, if you want to give me your money, I'll give you a revaluation, or please come in, give me your money. I think that I wouldn't generalize that.
Yeah, I think one of the things that you got to realize about Canada is that here you can sit, in your office in San Francisco or in your office here in Menlo Park, and you can see as many deals as you want. But in Canada, you need to do some work. Like you need to go fly around a bit, right? There's great deals in Halifax, Ottawa, Montreal, Calgary, Vancouver, Victoria. I mean, there is no tech hub per se. I mean, fine, Toronto Waterloo is probably the biggest, but there's great deals everywhere in the country, and I think you just need to do a little bit of work if you want to go find. We're in deals that no one else, regardless of whether they're Canadian or U.S., are in, and we found them at the most random places. So there's deals to be done.
Yes, David.
We can't have an agreement panel. All right.
I agree.
With
Go on.
great respect, I have to completely disagree. Canada is not as competitive, and you know what? For investors, that's a good thing. That attracts us there. We're looking at a bunch of deals, and there are not a lot of other folks looking at the deals. Now, as you get up in the stack, as you go later, of course, the Hootsuites, et cetera, they start attracting attention. People know about them, but at the earlier stage, it's much less competitive. I think, and
No, I
this is
agree.
my experience, can't argue, you guys see more deals than we do, but our experience is that it's less competitive, and again, that's a good thing. You should be proud of that.
David,
Entrepreneurs won't like it, but-
you're gonna be disappointed. I'm gonna agree with you.
Okay, go.
No, I think
Somebody had to. That's right. I'm Canadian. I'm being agreeable.
You didn't say sorry.
Yeah, sorry, but I agree. Sorry. The truth is, there's a lot of folks that just won't get on a plane because there's so many good deals here.
What do you mean? A lot of folks down here in
Here in the
US,
valley, yeah, they just won't get on a
investors? Okay.
plane. It doesn't matter if it's to Portland or Seattle or Austin or New York or Boston. They just won't get on a plane, and why should they? There's just tons of deals. I mean, we did a security landscape review about a month ago, and there were 538 venture-backed security companies in the valley alone. And you think, okay, so there's a lot of investing that's going to consolidate. That's great. But most people just don't want to leave. And so when it comes to investing outside of the valley, and it doesn't matter if it's Canada or Seattle or Portland or New York or Boston, you pick one, it's just there's not a lot of VC competition there, and so you do tend to get better prices. You do tend to get better talent for less money, and just better deals.
Yep.
I would just say to that, we've issued 22 term sheets in Canada and made 22 investments. That doesn't happen in, we have 2 investments in the US and we hit 6 term sheets, so 2 out of, and that's probably a decent batting average, but your point is very, very well taken. Particularly on seed and Series A, it's hard to find those, and it's a good opportunity.
How many deals have you lost in Canada that were
None.
competitive? No, I'm asking Mr. Singh. Intel. Big Intel.
I can't disclose that number. I can't disclose that either. The next question you're going to ask is, what your IRR?
Okay. Okay. So you guys are wearing out a lot of. You folks are wearing out a lot of shoe leather, visiting companies in Canada. I think it was Greg who mentioned the young kind of incubators and accelerators. I mean, what are you working with those? Are you seeing those? Help me out there. I mean, obviously, again, we can compare it to Silicon Valley and say, it's a different creature here, and throw a rock and you'll hit, right here in Palo Alto, there's, within, a couple of feet from here, there's a ton. What are you seeing in Canada,
Sure, I'll
David?
just start because we do very early seed and A,
Yes.
so we're looking for those little minnows that are going to become the big whales next time, or narwhals, sorry.
Narwhals.
And one of our portfolio companies, Truly You, in Vancouver, which has an advantage for being in Canada, I'll explain that later, was very gracious, and they did a kind of a joint pitch contest for us and with the BC government, and the folks were extremely helpful from your office and the trade association up there. And we saw, I think, about at least 60 companies came in, 6 were finalists, and we had a winner. And as a prize, we flew them down to meet our whole partnership, et cetera, et cetera. We did choose to invest in that company, but there will be another one. We are, again, about to announce one that came through that competition to us out of the Hootsuite world, and so we like it. The people there are extremely helpful. You can, if you're a VC fund and you want to go up and do a pitch contest or something like that, I can guarantee you, you will surface a lot of good support, and it's always fun to go there.
That's great. I like Truly You. I've met them. I met Kim there. Very nice. Anyone else?
Yeah, we're not at a stage that really
Yeah.
needs to.
So you're not looking at the
Yeah.
at the very early.
I mean,
seed
there's
stage?
definitely some interesting stuff coming out of the
Yes.
the accelerators, but they're generally too early for us.
Okay.
Yeah, I would, just the comment that I would have is that there has been a number of accelerators, incubators. It's a question whether the best opportunities are coming through there, to be honest. Certainly B-level opportunities, but the A's will say, I can do it, why do I need that? What is different, and I had built an accelerator, but really it's a community in downtown Toronto called 111. It was strictly a place for people to hang, no mentors, et cetera. It was really a real estate play to congregate. Same thing with Communitech. You see that in Waterloo. That's fantastic. It really is a center where CEOs love to meet CEOs and hang. That's okay. But the notion that people need guidance all the way through to do a lot of small little things, frankly, I'm not interested in investing in them, to be completely honest.
I think you could say the same about Silicon Valley incubators. What's hot? What's hot in Canada, sector-wise? We've heard a little bit of that. I mean, I'd like to know. It seemed a few years ago I was hearing a lot about gaming companies out of Vancouver, maybe out of yes, as well. What's hot? What sectors are you folks finding of interest?
So again, I don't think there's
Harry.
a constant. Again, I'm going to go against the generalizations of Canada. I don't think there's a sector that remains hot for a long time in any country, any place. Just like in Canada now, we see a lot of the this variable companies, almost like a domain expertise. You got the start from the East Coast to the West Coast. Pretty much, we are on the recon, of course, in Vancouver. You got the the NIMIs and the 4Is and the, you look at the push and, Talmic, and if you look at, it's almost like everybody says, I got to do this variables. But that also, so it's not just negative in a sense, because now the whole, the ecosystem is coming around and saying, I got to develop an ecosystem and domain expertise here, from technology perspective, deal flow perspective, the business perspective, and it just. So I think right now I would say that is hot. Another in Canada is like, and again, very at a deep scientific level, drones. We see a lot of drones deal coming out of Canada.
Anything surprising that you all are seeing?
Yeah,
Yes.
I mean, we live in a post-Snowden era, and that has propelled Canada up if you're interested in the privacy game. And so Truly You is benefiting by being north of the border here, because after that, a number of European countries especially started to pull back from engagement with US companies. And so that's an example where Truly You wants to be the first internet identity bureau and provide like Experian and Equifax credit to, we want to be in the identity. Are you who you truly, you say you are? And that is, again, an advantage. And I think that can be played upon across a number of areas. That's, we call it regulatory or jurisdictional arbitrage. And there you have an advantage.
I think
Might change, by the way. There's a bill C-51, which anybody in government, shut this thing down, because it's actually going to go right against what you just said. And it's been proposed right now, and we've just got all the CEOs in Canada just demanding to retract that legislation, because we're going the way of the NSA. Anyways.
Christina, you had a point?
but way more poorly funded.
Yes, yeah,
From the
yeah.
NSA, yes.
Going to be a bunch of
They're
email
gonna
hackers.
use they're gonna use payphones and stuff.
Exactly. It'll be like a Get Smart movie. So I'm gonna split hairs between hot and strong. Hot I see as being kind of fads, whatever is kind of hot right now, very Zoolander. But there's different regions that I think are really strong, and I think that spins out of what's been successful there before. And I'm going to go back to a point I made previously. A lot of companies that have been really successful in a particular city have spun out a lot of great companies that have focused on the same area. And a lot of it is because there's the DNA, there's the muscle memory among those people on how to scale and grow that type of a business. And so that's why when I look at Vancouver, I see a lot of really good data-based companies. There's some really good storage companies, really good analytics, really good BI, really good big data. You're starting to see a lot of those types of companies spin out of Vancouver. Same thing's true with social media because of Hootsuite. Same thing's true about electronic arts and gaming. And so you're starting to see those ecosystems of talent develop, and that's breeding a category of really strong startups in that space because there's enough people who know the business really, really well. I think the space where I see companies running into trouble is when they try and build a business where there's not a lot of deep domain expertise in that geography. And so when you start to look at, areas like Toronto, where there is this, Toronto and Ottawa, where there is a strong hardware component, there's the University of Waterloo with strong engineering, you have to start looking at the industry that's specific to that area, and it usually falls out of a big success that came from that region previously. And so that's how we look at it. It's not hot, it's what's been really, really good before.
I like that. What's strong, not hot. What else has been strong is the exit market. We had a question from the audience in the previous panel, and Dina there said, gave us some good stats. So I want to, you can't talk about Shopify, or you don't want to, but, well, you do want to, probably. But, just looking at the exit market, how about the rest of the panel? Would you like to take the Shopify question? Do you see that as a harbinger of more exit activity? Do you think IPOs will pick up? A couple of months ago, I would have compared it to the hot IPO market in the US, but things have cooled.
But I think if you look at the stats on IPO versus M&A,
Yes.
in any given
In
period,
Canada? Yes.
no, across North America,
Okay.
it's sometimes it's 5%, 10%, goes up to 15%, but it really just kind of stays in that range. So I don't think one IPO is going to change that by any stretch of the imagination.
Very good.
And the way we think of exits is, and this is one of the biggest problems I think Canadian companies have. And being here, we think about surface area of the different components that you touch. And by being here, you just touch so many different companies. And acquisitions are like a game of musical chairs. And when the music stops and you're talking to a bunch of different corporates, you want to have a seat at that table. And I think that's the biggest challenge for Canadian companies, is to have a seat at the table, because you're not in constant contact with the various acquirers that are here in the Valley. And so, our approach, our philosophy is, when we have an investment that is outside of the Bay Area, is really create that bridge back to Silicon Valley. And we're trying to do that with our Canadian companies, with our companies in South Carolina, in New York, whatever it is, but really create that competitive tension with some of the corporate acquirers, because when at some point the music will stop, and you want a seat at that table.
David.
I'll give you two examples from my prior experience. Very early in my Bloomberg Capital career, we invested in a company called Creo, which is a Vancouver-based company, which went public and then became a unicorn because it sold for about $1 billion to Kodak.
Went public many years ago.
Yeah, many years ago. This is very old. I'm
Yes.
dating myself. And that was a big success. That was in the days of sort of old enterprise-style sale, where you knock on the door of the CIO and sell multi-million-dollar installation and so on. So that world has kind of changed in many respects. But let me give you the counterexample. It was a negative example, and Canada actually was at a disadvantage. This was a company that I invested in for the Bronfman family, and actually inherited the investment. It happened just before I got there. It was in a company called Catalina Marketing Systems. Some of you know that. Now, that company split into two. And the mistake that the Bronfmans, and I'm speaking, very friendly to them, the mistake they made is they thought, oh, we'll do the Canadian version, and we know Canada really well. We know all the owners of all the supermarkets, and Catalina operates in supermarkets as a marketing tool for post-checkout coupons and so on. And they thought, oh, we can help you expand in Canada. And that was actually the wrong strategy, because the U.S. market went on to be extremely successful, went public, et cetera. The Canadian entity was just in too small of a market. And the Canadian marketplace for supermarkets is pretty oligopolistic. There are like 5 that control everything. So we had to pay the capital cost of infrastructure to put the machines in the supermarkets, whereas in the U.S., which was very extremely competitive, the supermarkets would pay for the machines to be put in. And so it was entirely different capital structure, entirely different outcomes. And so, be careful about it. Think global. That's the real key. Get rid of the borders and help grow the company bigger.
Well, I love what Dan said about, it's a game of musical chairs, and when the music stops, you want to find a place to, you want to make sure you have a seat. So I have to ask the bubble question. That's all I hear from investors these days is, oh, it's coming, we don't know when. Is Canada prepared are your Canadian investments prepared for a bubble crash?
Well, I'll start off. I mean, if the team decided not to make any new investments, but to make sure to reinforce the balance sheets of all of our existing ones, I'd be absolutely happy with that. In fact, when the markets got spooked, when was it, like February of last year, we basically went on a 90-day hiatus, and if we did a whole ton of raising. That was when we did Shopify, Hootsuite, and Desire to Learn, all kind of 1 month after another. They were all $100 million plus financings. And so our focus has been build the business first. Don't worry about if there is a bubble or not. That's not within our control. But make sure that the balance sheets are all fortified with cash before starting to spread yourself far too thin with too many portfolio companies that end up being undercapitalized.
And I think that at the early stage, I think it's less of an issue, because if you parse the data a little bit more fine grain, you find that the venture resource, there are a few different Pricewaterhouse people do these charts, which you can go find. I think your organization does this as well. You see that the seed and A level in the last 10 years have about doubled in valuations. And taking into account inflation, it's not ridiculous. The Series D and above have quadrupled. So the bubble is true, but it's really at the higher level. The seed is not so bad, probably because it costs a lot less money to start startups. The opportunity cost for young people getting out of university is lower. They have less choices, so they're willing to take a chance. So I'm not too worried about it as a seed investor. The issue is, can you survive the period of growth when you need to raise the next? But generally, it's worked out. In all recessions, whenever we've invested in recessions, it's been the best time to do things.
I hear that from investors all the time too. Any final thoughts on that question you want to pass?
Yeah,
Harry.
as an entrepreneur, when you're building a company, I
Yes.
think I don't think you should worry about bubbles or exits or IPOs. You just want to build a solid company. Yeah.
Okay. No RIP. Good times. Tombstones here. Q&A. Any questions from the audience? Oh, don't be shy. We can. No one?
Can I knock down? You just mentioned RIP, and that was a famous.
Yes.
from
Yes.
Sequoia.
People didn't pick up on
I
it.
don't
Go
want a
ahead,
Sequoia.
David.
I don't want a Sequoia bash. They're a wonderful firm.
No, it's.
They've invested in several of our companies, but I just want to give this Canadian-Israel example because Canada,
Sure.
Israel, Australia, Sweden, other smaller countries sort of feel like a inferiority complex, and you shouldn't. And Mike Moritz was famous for going to Israel, and he would pound on the gavel at these VC conferences, and he would say, "Where is your Nokia? You don't build any big companies in Israel. Where is your Nokia?" And I would say to him, "Where is Nokia, Mike Moritz?" Things change. In other words, so I would actually be happy with a Canada that is okay selling companies on an M&A basis over and over and over. And as Christina really brilliantly said, the spin-off of the talent that have been lieutenants at these companies that go on. And I'd say, if anything I've seen in my Israel investing experience over the past 30 years or whatever, is that those lieutenants are your seed corn. That's really who you want to be promoting, more than anybody else, more than investors, more than university graduates. If you get those lieutenants to stay and do more there, you will have a thriving economy for the next 20 or 30 years.